Hey everybody, it's Pete. Welcome to a new episode of Stocks for Breakfast. Today we're going to talk about something that I think most people are clamoring for, which is after you understand order flow, after you understand how to read the tape, then there's that part in between entry and exit. We call that B, between entry and exit. And it's fascinating because we can all have different entries and different exits. Probably 50 of us could get in exactly the right spot, and we'll end up having 50 different exits, even if we're all looking at kind of the same spot. But what we're going to talk about today, I'm going to actually show you a behind the scenes video of something that we do every day in the boot camp, which is analyze trade management. Because really what we want to do as a community, we want to learn how to get into trades, obviously at the right time, but then looking back on, could you have managed that trade for either a smaller loss or holding it for a much bigger win? And in this particular instance, we're going to look at two stocks. We're going to look at FANG, F-A-N-G, and we're going to look at PSX. But here's the important thing. Especially in this market that we're in right now, it's very important to understand that trading losses are nothing more than a business expense. And your first loss is generally your best loss. And the trade that we're about to look at, especially the FANG trade, there was a really good clean entry, a really good immediate follow through on the entry, but then the stock didn't do what we expected it to do, or more specifically, we didn't see what we needed to see in order to feel confident, in order to have conviction and follow through. The stock ended up reversing, which would have been over a $10 loss on this particular trade, but we managed the trade properly. But here's the key, and this is the most important part. You need to be thinking through what needs to happen, what should happen, what does happen, and then how you're going to react, right? So in other words, you're really scripting your success. That's the biggest part of the thing that we teach in the boot camp is once you understand order flow, once you understand once you understand how to read the tape, then you need to script what you plan to do no matter what. But here's the kind of the cool thing. The stock actually broke out, looked good, failed, and then we identify the next level where we want to get back in. And here's the key. A lot of traders don't do this one thing after getting out of a after getting out of a losing trade. Something you should do like clockwork, like habit, like every single time it happens, provided the idea is still valid. And I'll explain what that is in the video. So enjoy the sneak peek behind the scenes. If you find these videos helpful, definitely subscribe to the channel. You get alerts on all of the updates that we have. As well as, look, if you want to come behind the scenes and do this with us in the boot camp every single day, this is just a tiny segment of what we do every day. So click down and learn about the boot camp too. Enjoy the video, and I'll see you soon. Take care. Hey, Valerie, just wanted to briefly mention the stock that you had called out in the day trading call, the entry in FANG on December 9th. So this was actually a really good idea. I mean, we had this really nice rally. We've been talking about it for a while. We actually looked to the left, and this is the reason that we stalled. And we kept talking about this, depending on where you put the exact number, between 52, 55, had plenty of room through that level. So your entry on the 9th here, there's really nothing, quote unquote, wrong with the entry. The only thing to hyper analyze the trade or just review it for the sake of making good decisions all the time. We've been spending some time talking about what should happen next and what shouldn't. So you actually did get really good price action next. Now, again, this is still below this resistance level, but this is what you want to see. You want to see a stock when it breaks out, which it kind of did here, and it went well bid immediately. The problem was the very next candle went to an inside candle, so you did not get follow through, which again, not the worst thing in the world, but the very next candle was a false breakout. And this here would have been where I've been saying to myself, okay, absolutely the opposite of what I want to see. And I probably on this candle would have scaled back on some of my shares, if not just pulled the plug, because it did literally the opposite of what we wanted to, which is a higher open and close higher. It opened higher and closed on the lows. But that's not even the big deal. Let's say that you managed that position properly and you got out of it. It's very clear now at this point that $50, if we go from here, $50 here, 48 here, 48 here, 48 here. This is why we had the $50 buy stop just above this area. If this was a stock that you were in, if this is a stock that you plan to get back into, The single biggest advice I can give you on this particular trade and any trade going forward is you need to set alerts. It's something that a lot of the newer members get aware of and then get in the habit of doing, which you can see that we're actually doing that on quite a few trades today. So at the very least, you should have had an alert set for 49.75, 50, anywhere in that area. And then when that triggered today was the day to get back into the position. So you don't want to micromanage this. It was a good idea that just didn't follow through. Just a question of where you pulled the stop loss on it. But because it went sideways for a couple of days, because the level was so obvious that we were looking for, I would have absolutely have had a new alert, making sure that you're taking advantage of it. Now, I'm sure the pain is a little bit greater today, seeing that it exploded in this monstrosity of a green candlestick. I get that. But don't focus on missing the trade. Focus on making sure you catch the next one, whether you got stopped out and looking for the next entry or setting up a target like we did in PSX today, where we had 72 just outside of this level looking for the entry to initiate this new swing trade. So not really a lot to micro analyze on that trade as much as just making sure you catch the next one by setting an alert.